The broadcast is now starting. All attendees are in listen-only mode.
Hi, everyone. Welcome to the Beginner Circle webinar. If we can do a quick sound check, that'd be great. If you can just type yes in the questions box if you can hear me, that'd be great. All right. Okay, so I'm going to be in the rotation here with Zach and Garrett moving forward, so you'll get me every third week. May do some things a little bit different and some things the same. I don't have quite the number of charts that Zach and Garrett have prepared, so I'm going to use some of Avi's charts, some of my charts, and then as we move forward, I'll work some of them more into my charts. But hopefully that gives us a little bit better idea of what we're looking at with Avi's charts as well, so we can kind of work through his charts as well. And then any questions, just go ahead and ask along the way. All right, so starting with the XPX bigger picture chart, I wanted to start off the 2009 low because this was a very significant low that we had in this chart. And so what we're all tracking, and all of the analysts are tracking this the same. We're looking at this in one of two ways. So we've got the 2009 low as a major significant wave 4. And we have a 1, 2, and then 3, 4, 5. So we're finishing out this larger degree pattern. The big question that we have right now is, have we completed all of our wave 4 here? We're on our final fifth wave higher, which is going to mark our very significant top, or do we still need one more fourth down into 2022, followed by another fifth higher into the mid 2020s? That's the big question we have right now. And how this reacts and how this pushes higher really should answer that question here in the near term. I'm showing the two different paths in white and yellow. These white and yellow counts correspond to what I'm watching on my smaller degree time frames. And so if we zoom into the smaller degree time frames, this white chart would suggest that we still need that other fourth down to come. And under that case, we're going to be topping in this third wave much sooner than we would be in the yellow fifth wave. So we'd have a shallower top. We wouldn't be reaching quite as high as the fifth wave. We wouldn't be extending quite as high. So under that white count, we're looking for an ending diagonal where we're topping in a wave 3 imminently, looking for a wave 4 to the downside, and then a wave 5 to the upside, topping in that wave 3. That would still allow for, again, zooming back to the bigger picture where we have our white count here, would still allow for this to get another fourth wave down and not be so extended on this third wave, allowing for that final push higher for that fifth wave into 2024. Under the yellow path, which is an impulsive count off of this 2019 low, this could potentially extend much higher, up as high into the 4,000 range, 3,800 to 4,000 range before topping. Under that case, it becomes much more probable that we have completed all of wave 4 here and are in our final fifth wave up off of the 2009 lows. So those are the two different paths that we're watching here on the SPX on the bigger picture. So let me drill down to this the difference between the yellow and the white counts here, so we can be kind of clear what we're all watching here. This yellow path, which is an ending diagonal, has some issues now. This third wave has extended to the point where it's going to get very difficult to have overlap between our waves 4 and our wave 1, which would still allow for this to be a diagonal, but it's very difficult to rely on a non-overlapping ending diagonal. So we have to look at this. We have to allow for this now to be an impulsive count under this yellow path. And so that would have a 1, 2, 1, 2, and then would be in a third wave up, still pushing higher, looking for a corrective retrace for a wave 4, and then a final wave 5 of 3, and then a 4, and then a 5 of 5. So that's the impulsive count on the yellow path that we're watching. Okay, so again, we're going to need another fourth and another fifth for a wave 3, and then another fourth and then another fifth for a fifth. Under this path, we'd be in the heart of a wave 3 of a 3. Okay, and this is right now the markets are really supportive of this impulsive path. We're seeing very shallow retraces, markets getting bought on every single dip, which is again supportive of what we're seeing in thirds of thirds. We're just seeing a very steady grind higher. So right now the market has the characteristics of being in this yellow path, and that's again one of the things that we see in that is just every single dip being bought. So that's kind of what we're watching right now. And until we start to see this break down below 3169 to 3045. Those are the levels that I'm watching to really signal that we're not following this yellow path any longer, and we may have already topped in this this white ending diagonal count, giving us this larger fourth wave to the downside. I've got to give the benefit of the doubt to this yellow path, which is going to push us higher. So I am looking for a local top here for this fourth wave, but again, under this yellow path, it does suggest that this is going to push higher. Now, the other alternate that Avi is watching, he's got an alternate wave 3 on his counts that you can see on his bigger picture count. And that would just suggest that this wave 3 is up here versus being the top that we saw in 2019. It's not really supportive with the way that this is subdivided, because right now it's pretty clear that we only have 3 waves up off the 2019 low. So it really is an alternate right now. It's not something that's I think is highly probable at the moment. So I think the 2 paths that we're watching, again, we need at least one more fourth down and a fifth up to give us an ending diagonal under this white path. Whereas the yellow path, we still need another series of fourths and fifths to finish off this sometime in late 2020, early 2021. And again, this could push as high as 3,800, 4,000-ish in that zone. And it could even extend higher depending on how strong this continues to rise. But the fibs certainly are supportive of that, of getting that high at the moment, and potentially even see a stretch all the way up to the 238.2 extension on the larger time frames, which doesn't come until 4260. So that's the potential on the yellow path. And again, under that yellow path, we can see that, with that extension this high, it really starts to allow for this to have completed the entire move off the 2009 low, and that going back even further, that's a very significant top that we could be seeing we could be in a bear market for a number of years, and we could see a sell-off that we haven't seen since 2008. That type of sell-off, if we continue to push directly higher. So we run that risk of that type of event should we continue to push higher without getting a retracement for this smaller fourth wave here. All right, so let me see. I've got a question here on the SPX before we move forward. What are the levels that need to break that show the SPX can go straight to 3,800? We've already broken those levels, and the levels that I was watching was 3169, and that's the 100 extension of this second series of nested 1-2s right here. So we have a 1-2 and then a 1-2, and then the 100 extension off of that, and the 76.4 extension of the initial move, which came in at 3253, also broke. So we've already broken out through our 2 pivots that we watch to suggest we're in the yellow path. So again, that's another reason why we've got to give this yellow path some credence here, because we've already broken out through the upside pivot levels from this initial wave 1 and this wave 1 of 1 smaller degree. So again, we've broken through the 100 extension of the wave 1 of 1 smaller degree of 3169, and we've broken through the 76.4 extension of the wave 1 of 1 larger degree at 3253. So again, a break of those 2 levels is supportive that we are indeed following this impulsive path. So we've already broken those levels. So again, until we break back under the support, which that resistance now becomes support. So until we break back under that support level at 3169 to 3043-ish, again, this yellow path is got some it's got some credence here. Looking at the Nasdaq is also following a very similar path up off the lows. So we've got, again, 1-2, 1-2, and then potentially being in a wave 3 right now, and then needing another 4 or 5 to finish off wave 3, and then another 4 and a 5 to finish off the larger degree move off the 2009 lows. So bigger picture, we're going to have the similar pattern that we're seeing on the SPX, and again, it's fitting those same levels. The yellow versus the white pivot on the Nasdaq comes in at 86.20 to 83.41. So as long as we hold over that zone, this yellow path is still favored. Breaking below that zone would then put us either in the ending diagonal count in the white path, or potentially some kind of a top here. But again, because we only look like we have 3 waves up off the lows, this 2019 low, it's more likely that we still need at least another 4th and 5th to finish off this larger degree pattern on the Nasdaq as well as the SPX. And so the Russell 2000 is one that's been much weaker than the other charts. And this one still has the potential to be in even a B wave rather than breaking out in a wave three of three here. So on this count, we've got a 5-wave move for an A wave, and then we've got a 3-wave move for a B wave. And then off of this B wave low, we've got a 1, 2, and then a 3. This still is counting better as a diagonal, just based on how far that this has stretched. But we're still running into that same issue where we're going to have difficulty getting overlap between 1 and 4. And again, it's not necessary to have overlap between 1 and 4, but it certainly makes for a much cleaner count. But this is still potentially tracing out just a B wave off of its 2019 lows. We really haven't broken out yet. I'd really want to see a break over 1756 to really signal this is breaking out, but it's just really not a very strong chart. It's really much weaker than the other two charts at the moment, the NASDAQ and the SPX. So I'm also looking for this to be topping in a 4th wave. So this may follow a little bit different pattern than what we're watching on the SPX and the NASDAQ. So that 4th wave that we're going to see, that we are looking for in the SPX and the NASDAQ under that impulsive count, that may end up being much deeper on the Russell 2000. We'll have to wait and see how this looks once it does indeed top. But that's what I'm looking at right now, the Russell 2000, looking like more of like a diagonal finish off a C wave of a B, rather than the start of a 3rd wave that's going to break out much higher. All right, let's take a look at the VXX, and this is something that I cover in detail in the VIX service. Okay, so on the VXX tracks volatility, and it tracks VIX futures, and it tracks a combination of the front month and the near month, or the two closest months volatility futures in the of the VIX. Okay, so typically what we see in the VXX is when the market's trending up, the VXX trends down. The VXX rolls those two front month future contracts, and so it has a decay built into the product. That can be good for trading if you're looking for trading to the downside. However, you always need to be careful trading the VXX, because when it does pop, it can see very significant moves up off the lows. The VXX is looking like it's trying to find a bottom here on the 60-minute chart. I've had this 1322 fib on this chart for several weeks now. It's held that level almost to the penny for several days now, and it's just starting to curl up, starting to break out. So this chart I've been watching really carefully in the room over the last several weeks to kind of give some insight into what may be happening in the equity markets. And we're starting to see some divergence in the VXX and the equity markets, where the VXX was not following through with new lower lows, while the index charts were following through on higher highs. So that was giving me a warning sign that we may be topping in the equity charts, and that looks like we may indeed be seeing that, and at least for a near term. So I'll be looking for on the VXX, I'm looking for a move up into the 1570 to 1665 zone initially, and that may hold if we're following that yellow path on the SPX and the NASDAQ for that 4th wave, and then potentially get another 5th wave to the downside. If that level breaks, it may signal that we're seeing a larger degree correction on the index charts. But assuming that level can hold, we should be, again, following that yellow path, seeing some higher highs on the index charts and lower lows on the VXX. Okay, question. Are you seeing any good buying opportunities in this picture for longer term investor traders, SPX, NASDAQ, small caps? At the highs, no, not right now at the moment. I'm personally not looking to add to any equity positions. I'm looking for some kind of a pullback. Again, if we can get a pullback into towards this 4th wave yellow zone, there may be some opportunities. Probably I would want to look towards individual names, see what may be available on the individual names. But if we're following this yellow path, we may potentially have some higher room to go. But again, I think individual names may be a better bet at this point in time, just based on how extended the market is. All right. Okay, are there any other questions on the index charts before we move on from there? Okay, how high can the wave 3 go on the SPX? Are we talking about the wave 3 of this degree? Which wave 3 are we referencing? This current wave 3. Okay, so this current wave 3 in this yellow path, the current path that we're on, I've been noting this in my updates. We have a larger fib, the 161.8. Let me pull up my TradeStation chart. Let's see that. I use both TradeStation and MotiveWave. I'll be flipping back and forth a bit here between the two. Okay, so we've got this current wave 3 here. And sorry, the nomenclature is a little bit off. This circle wave 3 is the same as this parenthesis wave 3. I've got my TradeStation charts in alignment with Avi's nomenclature so we can have some consistency, but they don't align with the MotiveWave charts. Okay, so that this wave 3, we've got the 161.8 coming in at 3350 on our linear scale fibs. So we have the potential to move up towards that level before topping if we can get, but we're very extended off of this move from the October lows already. So it's 1, 2, 3, 4, 5 is already very extended. Our wave 5 is almost 100% of our wave 3. We're right there actually. I mean, we're right at 100% of 3. So it's very unusual to see a fifth wave extend beyond 100% of wave 3. This wave 1 was also very small for this entire structure. So I really would not want to see this move too far beyond 3350. And really, ideally, we've topped in this wave 3. But I really wouldn't want to see it move too much beyond 3350. If we move too much beyond 3350, really got to start looking at some other alternatives where we may have this structure here, maybe a nested 1-2 setup, something more bullish. But that's what I'm looking at right now. 3350 is really about as high as I'd want to see this go to really fit with our fibs somewhat reasonably. And again, I think too much beyond that, it gets this fifth wave gets too extended to really be highly probable. And then once we get that retraced, then this wave is extensions on this particular wave are no longer an issue, and then we can continue to move higher per this chart. So once we get a retrace for wave 4, then we can move up towards 3700 for wave 3, and then another fourth wave and a fifth wave, again on our way towards 3750-ish, all the way up to potentially as high as 4000, 4200 for this final fifth wave under this yellow path. So still quite a bit higher under the yellow path if we continue to follow the impulsive path. Again, if we break down per the white path, get through that support zone, then we should have one more high for this fifth wave up towards 3400, 36-ish hundred before topping and seeing a more significant retracement. All right, let's move on. So any more index questions, equity questions before we move on to other things? All right. So what I'm going to do, I'm going to go into metals. I'm going to look at Avi's charts on the GDX. Actually, let me pull up my MotiveWave chart on the GDX first, and then I'm going to go over what Avi's seeing on that and how that kind of relates. So there's a couple of different counts that are out there right now on the GDX between Avi and then Zach and Garrett, how they're counting this move up off of the 1728 low. Zach went into this in a lot of detail in his last video, why he's counting it this way versus Avi's path. But basically, we have what everybody's counting as a wave 1 off the 2016 low, followed by a really long and drawn out corrective wave 2 for this. Sorry, one second. Okay. For this wave 2, and then now being in our wave 3 to the upside here. Avi's counting this as a series of nested 1-2s to the upside. So 1, 2, 1, 2, and then looking for a bottom in a wave 2 and looking to break out strongly in a wave 3 of 3 here. Whereas Zach and Garrett are counting this as being potentially a leading diagonal. So having a 1, 2, 3, 4, 5 for a wave 1, needing a corrective retrace for a wave 2, then should be followed by a wave 3 to the upside. They're very similar as far as they're both looking to be starting wave 3s to the upside. The big difference is that under the count Zach and Garrett are watching, we would likely see a fairly deep retrace for a wave 2 prior to seeing a large breakout to the upside. And that would be because, again, we're looking for a top in a wave 1 prior to breaking all the way out here in this wave 3 up. Obvious count would see a more direct break higher and just directly break out higher into this wave 3 up towards our higher levels. I think the pivot level is probably around 35 on that. I think that's about where we'd be looking for the breakout to occur, which is a 76.4 extension of our wave 1. So, and we can really even say 35 to 44. So this is really the upper resistance zone on that. So we start breaking through this zone, through this pivot zone, and we really we start to follow this green path, this more direct path higher. That's really the two different counts that are being that are out there right now between Zach and Garrett and Avi. So again, Avi's counting this as a 1, 2, 1, 2, whereas Zach and Garrett are looking for a deeper retrace prior to this fully breaking out. All right, I'm going to pull up Avi's gold chart. I will get to TLT after we do metals. Okay, so Avi's gold chart on the daily. Again, he's counting this as off of the October lows 1, 2, and then currently being in the midst of a third wave up here, and potentially we're looking at a top here for a wave 1, and this wave 2 may get a little bit deeper here prior to breaking higher. So this is a very bullish chart. Again, invalidation comes of this 1, 2 comes with a break of 135-ish. And then he's got an alternate where we're in a C wave. But again, a very bullish chart as long as we can hold over this last low here at 135.9-ish. So I'll pull that chart up on my end, smaller time frame. So we can see that wave 1 that's on that daily chart corresponds to that wave 1 here on this gold on this 20-minute chart. And so again, overall very bullish, and that low is actually at 136.81. Okay, so we're still looking for a move down for a deeper wave 2 under that count, but after that we're still looking for a large break on higher. So that's how we're looking at these various degrees. So on the bigger picture chart, obviously bigger picture chart, we can see that wave 1 here corresponds to this wave 1 here, and then we're looking for a corrective retrace for an ABC. This move up off this 144.69 low still does look corrective in nature. It's still very flat, and so we're looking for an A, B, and then C down for this wave 2. And again, as long as it can hold over the 136.81 level, this is still looking very bullish. Ideal support under this comes in at the 144.35 to 140.37 level. That's our 50% retrace to 76.4 retrace. The only thing I'll note on this is that we don't look like we have a bottom yet. This move up off of this 144.69 low is definitely looking corrective so far. So we may push a little bit higher for this B wave prior to breaking out or prior to topping in this B wave, but it does certainly look corrective off the lows. So that's how that smaller degree time frame chart again fits with the larger path. So we can see that we're working in various degrees here. So again, 1, 2, and then that's how that looks on the smaller time frames. So we're just working on the smaller time frame. We're just working on this little section right in here. We post our small time frame charts on the daily. It's just this little portion here, but we can see bigger picture. It's still very, very bullish. So when we're trading, we always want to keep in mind what we're dealing with on our bigger picture, our forced forest view, basically. So sometimes we can get caught up in what's going on in the minutia, and we can get shaken out of a trade. And there's a lot of talk in the room a lot of times on the day trading, what's going on with micro support levels and micro 5-wave downs, micro 5 waves ups, and sometimes we need to make sure we're always focused on what's going on bigger picture and really know our time frames and know what time frames we're trading, know what our goals are. If our goals are day trading or longer term trading, but we always need to keep a focus on those larger degree charts, because again, this smaller degree charts, the ones that are posted regularly in the room, are really just these. We're talking about this little section right in here. That's it. So we really want to focus on the larger time frames, make sure we know where we're at, bigger picture. All right, let's look at next. GLD, let's look at silver. We're going to use the obvious chart here on silver. Okay, so again, off of the lows that were struck back in 2013, got a 1 and then a really drawn out wave 2, followed by a 1, 2, 3, 4, 5, and then an A, and then B, and then C, looking for a wave 2. That should be followed by a wave 3 to the upside. So again, this is what we're looking at off of the lows that were struck back here in 2018. Again, 1, 2, 3, 4, 5, decent little clean 5-wave move up, and then an A, and then a B, and then a C. So looking for a C wave down towards the 17-ish area prior to breaking out. Let me pull up the smaller time frame on silver. We can see how that looks. Okay, so 1, 2, just make sure I'm looking at the same there. Yeah, okay. So, and we may already be in a C wave to the downside. So we may be closing in on a C wave A, B, and then this may be wave 1 of C. If that's the case, we may get a fairly deep C wave, depending on how high this retraces. This could project down towards the 76.4 retrace. Depending on how high this wave 2 retraces. But this also may be the A wave still needing a B wave higher before breaking down. That may fit better with what we're seeing on GLD and even GDX. So A, B, C down, or even potentially this could be the bottom of the A wave here, still needing a B wave higher than C. So nothing really suggestive that we've bottomed just yet. Again, the move up off the low does look corrective. But that's how this looks in comparison to the bigger picture chart. So again, when we're looking at our smaller time frame charts, we're really looking at a very small portion of our bigger picture. So we always need to see what we're looking at, what our bigger picture view is on these charts. All right. Okay, GDX. Okay, what's specific on GDX? What are you looking for? Review the bigger picture on that. I'm going to zoom in a bit on GDX. So GDX smaller time frames, also again ideally looking for a C wave down after getting that wave 1 up. Resistance for this B wave at 29.18 to 29.86, and then looking for that wave 2 down before breaking out higher. And again, that fits with Avi's bigger picture on the GDX here. Again, so looking for that 1, 2, and then 1, 2. So this 1, 2 here, as shown there, fits with the potential 1, 2 there. So again, when we're looking at our bigger picture charts, we've got we're really zooming in quite a bit here. So you can see that 1 and then 2 here on the smaller time frame charts, which are the ones we typically post on an intraday basis in the room. It's just a really small portion of the chart, bigger picture. So if we can hold that, the low that was struck, yeah, 2685, we potentially can see a strong breakout to the upside on the bigger picture. So that's what we're looking at on the GDX, bigger picture and smaller time frames. All right. Alt 2 114. Okay, the yellow path on the GDX. So these yellow path on the GDX. Okay, this would suggest that we have not. This is not a wave 1 off of and we haven't bottomed in wave 2 yet. So under this alternate path, this alternate yellow path, we would still see another break back under this low here for one more for wave C to the downside for this wave 2. And let me show you how that looks smaller on the smaller time frames. It's a little bit more clear, and I've got that laid out. Here under that alternate B. So under that alternate B, we'd have a wave 1 down and a 2 up under this yellow path, and that would then project down, depending on how high that second wave got. It will project down towards the 25 to 2460-ish zone, still holding our bigger picture count, because again, we can go all the way down. We can get as low as 2276 without invalidating. So again, it'd be an A, B, and then a C down towards 20. We can get as low as 2024 without invalidating. So we could see an A, B, C down, a break below the lows that were struck here at the 26 area for this wave 2. So again, that C wave again will project down towards 2560 to 2460-ish in that range. Depending on how high this wave 2 retrace gets, but it would break those lows that were struck here, and we would not be in this wave 2. So that's the yellow path. Red at alternate wave 2 would suggest that we've already bottomed in this wave 2. This isn't, I don't think Avi's got this on any of his charts right now, but it's something I'm watching. I think Zach's watching it also. And under this path, we don't need a C wave down for this wave 2. We've already bottomed in all of wave 2, and we would just be breaking out directly higher. Pivot levels I'm watching on that come in at 2951 to 2982. So 1, 2, and then breaking through those levels would suggest that we are already bottomed in all of wave 2. So that's the red alternate path I'm watching. And we're kind of, the question is, do I see today's recent action favoring Avi's chart versus Zach or Garrett's? We're really in kind of no man's land at the moment. I've answered this question a number of times in the room today, so I think it's on people's mind. As long as we're under 2950 at a minimum, and then really 2982, there's really not a good way to know. This action up off of this 29, this low that was struck at 2818-ish, and then the corrective retracer is certainly supportive of potentially being in the second wave and then a third wave ready to launch. But I would need to see it break 2950 and then 2982 to really suggest that we're not going to be topping this B wave. And I think a lot of that has to do with what we're seeing on the GLD and the silver charts. Those charts are not suggestive that we're ready to break out in a third wave right now. Those charts are really much more corrective looking in nature. So it's not nearly as strong of a case on the underlying metal charts that we're ready to break out on those just yet. So I think I'm definitely leaning towards seeing at least a C wave down here for this wave 2. That's just my personal thoughts on that. But if we start breaking through 2950 and then 2982, then the odds would start to shift that we've already bottomed into wave 2 and breaking out. Excuse me. All right. Let's take a quick look at TLT. Okay, again, I'm going to be using Obvious chart here, and then I'll zoom into my charts in the smaller time frame. So Obvious got us topped in an A wave here, and then an A down, looking for a B up, and then another C down for a B wave. The action down off the high is very sloppy, but it is starting to look more and more probable that we've bottomed in at least this A wave. So we've got A, B, C down, and it is looking more likely that we've bottomed this A wave. Since this chart was posted, we've already broken through the trend line there that he was showing in the smaller time frames. So that trend line has already been breached here, as we can see. I'm watching the 139.88 to 140.94 zone. So this is my pivot here that I'm watching. As long as that zone holds, we still could be in a fourth wave here, still needing one more low to get a fifth down. I think through 140.94, and I think we're on our way higher in at least a B wave. If we can get through 142.65 and then through 144 and then 145 fairly strongly on very shallow retraces, then the potential is there for this to be a nested 1-2 off the lows, and following this alternate yellow path, which would take us back up over the highs that were struck earlier in 2019, which came in right at the 148 area. So the potential is certainly there for this to have bottomed in all of wave 4 here and getting one more high. Again, the breakout levels I'm watching 140.94 to 142.65. Potentially could see this up for a final fifth wave here. If we start to see the slow down and really stall out or in these upper fibs here, then we are likely going to see this B wave take shape here. And 145.56 is the 76.4 retrace. So you start to see the stall out around that area. That's also the 138.2 extension. So we've got good confluence there. When we get good confluence between fib extensions and fib retraces, it's always something to look out for when we see turns around those areas. So this would be one area I'd be looking for a turn. I've got a confluence here, 138.2 and the 76.4 extension, a retrace. So got confluence there. I'd want to see a turn around that area for this B wave. And again, and that could see us turn down here for this wave C of B here, down towards the 125-ish area before heading higher one more time. But again, if we can break through that area, if we can break through 145.40, then it potentially we could see this head higher for a final fifth wave up, having bottomed here in this fourth wave. So that's certainly a potential at the moment. All right, USO. Let's take a quick look at USO. It's not real clean, but we'll take a look. Okay, so on the USO bigger picture chart, potentially looking for a B wave top. We're like in a B of a B of a B, so it's a really unreliable portion of the pattern, bigger picture. So it's just really not all that reliable. We may just trend sideways here on this for quite some time, but we potentially have 5 down on the smaller time frame chart. But again, just so we're all on the same page, bigger picture, again, looking like we're in a B of a B of a B, and we're looking like we're going to trend sideways here for quite some time. But smaller time frames on the USO does look like we may have 5 down. on USO. And today's action is certainly supportive of that. So again, 1, 2, and then 3, 4, 5, and our fibs they're lining up okay. Again, we use our wave 1 and our wave 2 with very shallow retrace for wave 2, and then we look for wave 1 of 3 here, and then 3, and then 4, and then extension for 3, another extension. So we've got a third kind of tagging this 176.4 fib, and then a flat corrective pattern for a wave 4 potentially, and then another fifth down, and we're at our 238.2 extension. So this still could extend a little lower down towards the 1158, even potentially lows 1135 for a wave 1. So we may have a wave 1 down off the highs, 5-wave move down off the highs. So be looking for a corrective retrace on this, setting up further downside action on the USO. But again, bigger picture, it's very, very sloppy. But smaller time frames, again, potentially we have 5 down. I'd want to see a corrective retrace to give us further confirmation that is indeed the case. All right, let's see. Natural gas. Okay, so bigger picture on natural gas. This is looking like it's finishing off a large 5-wave move to the downside. Potentially looking for a bottom here. So I've got 1, 2, 3, 4, 5, and again, this has been following our larger degree fibs fairly well here. Again, 1, 2, and then the 3 hit the 200 extension here fairly cleanly. You got a corrective retrace for wave 4, which tagged the 138.2 extension, and our wave 5 is now down towards the 261.8. So when we see things bouncing off fibs, hence fib pinball, it really gives us fairly good confidence that we are indeed following the right path. We have our fibs lined up correctly. We have our wave 1 and our wave 2 fibs lined up. We start seeing things really bouncing off fibs. It really helps us. So this does look like it's trying to finish up a 5th wave to the downside. We may need one more lower low on the smaller degree time frames. Zooming in here. So zooming in off of the January high, 1, 2, 3, 4. So again, then this, we can see our smaller time frames are also following our fib pinball fairly well. So our 1, 2, and then our 3 hit this 200 extension. We've got a consolidation here potentially for a wave 4. So potentially needing one more low down towards 180 to 176 to finish off this wave 505. So again, one more potential low here before bottoming, but clearly the trend is down. We don't have any bottoming signals just yet. So we will want to see some kind of a clear bottoming signal, move back up over the previous wave 4 here at 225 would be a good initial sign from a pure price perspective. Structurally, we want to see a 5-wave move would be ideal. All right, any other questions, folks? I don't have a DAX chart. I don't even know if I have a feed for the DAX. Funny. Okay, so that looks like it for the questions popping in. Thank you all for joining me. I'll post a video. Oh, let's see. Just entered as I just got our SPX chart. I did SPX early in the video. The video will be recorded and I will post that video. You can review the SPX chart from the recording. All right, so again, thanks everyone for joining us. This video will be recorded and posted shortly. I'll be back here for the beginner's circle in 3 weeks. Next week you have, I think Zach. It's either Zach or Garrett. I think Zach's up next week. All right, guys, have a great day and a great rest of the week.